Happy New Year, everyone. January is historically a strong month for markets, with record sales, earnings, and positive guidance often right around the corner. But are markets setting up that way again this year? Welcome back to Navler Market Buzz. The stock market seems to have lost a little bit of momentum lately. Is this just a slow holiday trading or is it something more?
It's basically holiday trading, but the good news today, which is the first business day in January, we did see our data center stocks explode. So that was a good sign that what we call the creme de la creme, the quality stocks, are tracking institutional buying pressure. So I have hope. That's 45% of my portfolio. So I'm off to a strong start for the year.
Our friends at Bespoke released their four-quarter decile report, and it looks unusually mixed with no clear trend. What do you think the market is telling us here?
Yeah, that decile report you're showing, if you look at the bottom right-hand corner, that is the best performing stocks. They're up over 4.7% in the fourth quarter, and they were actually the worst performing stocks prior to the fourth quarter. So that was just evidence that we had a mean reversion rally, a low quality rally. We confirmed that when we tested our ABCDF stock rating, that the F stocks did unusually well. And when you get those kind of rallies, they don't last very long. They're not sustainable. So we expect there to be a big flip in January where those kind of stocks will fizzle. The creme de la creme, like we own, the stocks with good sales and earnings, will reassert their leadership. And so we're off to a good start. But that was an unfortunate thing that happened in the fourth quarter. It actually started October 22nd, ran through mid-November, that there was just a lot of turmoil. This is when all the people were questioning the valuation of AI, and they were even questioning the value of Costco and other valuations. And short sellers like Michael Burry were being glorified by the media. So that really did disrupt the market quite a bit. But now it's time for earnings, and it's Judgment Day in the next few weeks.
Now, speaking of the fourth quarter, Tesla warned that production may come in lower than expected. What does this signal for Tesla?
Yeah, they did announce their fourth quarter sales today, and they were even lower than the expectations, but the stock didn't get hit. So basically, here's what's going on. Tesla sales have declined for 2 years in a row on their EVs. BYD is now the largest seller of EVs in the world. And Tesla is really focused more on its other businesses like energy storage, which is a very good business for them right now. They are also obsessed with the robotaxi. Elon's vision is that we will not need cars one day. We will just summon these cars or pods to take us around. And so they are going full force on the robotaxi business. And that is why investors in Tesla are excited and why Tesla's been doing relatively well. But we'll see if Elon can fulfill that vision.
Now, we're starting the new year with major international developments, a blackout in Moscow, and escalating protests in Iran. Can events like these have a real impact on the stock market?
Yeah, they can. Obviously, President Trump's New Year wish was for peace in the world. Obviously, that's what he wants with the Ukraine and Russia. But Ukraine is hitting at Russia's energy infrastructure, and the blackout in Moscow, I'm sure, was very embarrassing. So we'll see if we get anywhere. You know, there's a lot of accusations flying back and forth, but we do want peace in the world. There's no doubt about that. So the Iranian protests are quite fascinating. It's largely due to the Iranian currency has dropped 60% against the dollar in the past year. So the protests started in the bazaar when the merchants threw up their hands, says we can't operate with this really weak currency. It quickly spread to involve the students who want, reforms and things like that. And it's spread to major cities. It's at least in its fifth day now as I talk to you. And even in the holy city of Qom, there's protests. But the Iranian security forces have opened up fire with live bullets. Apparently several people have been killed. One of the leaders was a law student. She's already been arrested. The mullahs are not in charge of a majority of Iranians, and they have to kind of promote conflict to stay in power. But President Trump has, on Truth Social, said he wants to protect the protesters. I have no idea how he plans to do that, but obviously the whole world is on edge right now. And if we can get any kind of regime change in Iran, it's going to be welcome because Iran was funding terrorism around the world. And once you get a new government and you get reforms, you can welcome back in the international community. And there's a lot of sanctions on Iran. So hopefully, this will get resolved once and for all. But it's very tense right now. The news is very sketchy.
With global uncertainty rising, investors often turn to gold. Is gold still a good investment right now?
Absolutely. Mainly because the central banks are slowly losing control. What's happened is as these societies age, they can't pay their debt because they're losing households. And some of these societies have grown through immigration, but the immigrants haven't been assimilated or as prosperous. So a lot of these central banks are very nervous. Britain, France, France is under the European Central Bank, but France still can't do a budget for last 2 years now. So they're a mess. And what's going to be happening is the only way you can cope when you can't make your interest payments is to lower your rates to at or near zero. Now, China has already done that. Their rates are lower than Japan, but they're still struggling with this horrific deflation. So their only alternative is going to be to devalue their currency. So currency devaluations, lower rates are going to be the future in the upcoming years. The U.S. is going to be the last to cut, but I'm very, very worried that deflation is going to be showing up in our economic numbers very soon. Most of our inflation was real estate related. We've shown in past episodes of Market Buzz of falling rental costs in the last 5 months. We just got news in the new year that condo prices are down 1.4% September and October. Nationally, they survey the major metro areas. Between falling home prices, lower rental costs, and owner's equivalent rent shelter costs should be coming down. We obviously have low crude oil prices. We have a glut. If we get a successful resolution with Venezuela where we can go in and help them boost production with other U.S. energy companies, if we get a new regime change in Venezuela, then we'll have permanently low energy prices because Venezuela has the biggest oil reserves in the world. So there's a lot of fascinating things going on, but between low energy, falling real estate costs, and of course all that deflation we need to import from China, I do think deflation is going to be the big news this year. As a minimum, the Fed's got to cut 100 basis points, and we'll have that clarified when President Trump picks the new Fed chairman.
So if deflation is becoming a real risk, what does that mean for the Federal Reserve's policy decisions?
It means that you can't look in the rearview mirror to do policy. You have to look ahead. And what our Fed did wrong last year is they assumed there would be hideous inflation from tariffs, and it never showed up. And just as an example, there's no tariffs that affect the producer price index. There's only about 13 to 14% of the CPI that's affected by tariffs. So I subscribe to all these independent economists, and they didn't see any tariff danger, okay? And of course, the tariffs turned out to be not as bad as some people feared because, President Trump said, let's make a deal. If they start to buy more U.S. stuff, then he's nicer to them. And right now, we have the second highest exports ever with low crude oil prices. And of course, we export a lot of crude. So, I just think, people try to scare us. I think that it was unfortunate that Powell bit into that narrative, and whatever he was anticipating never materialized. I mean, it was month after month after month. The CPI and PPI were coming in better than expected. And, I think they have to go on their economic models instead of driving to the rearview mirror. And that's what Stephen Moran's been trying to push. That's what Christopher Waller saw. He saw the decline in the labor market before the Labor Department announced it. And so we need people with good economic models, not people that just react.
The upcoming announcement, as you said, for the next Federal Reserve chair is getting a lot of attention. How important is that decision for the markets?
Well, the markets are going to want somebody independent. So they're going to prefer Christopher Waller or Kevin Warsh over Kevin Hassett. But I still think Kevin Hassett would be a fascinating Fed chairman because, again, he's just the happiest person around, okay? Maybe SpongeBob is happier than Kevin Hassett, but other than SpongeBob, I can't imagine a happier human being. He's just a very positive person, and I think it would be great to have a positive Fed chairman. Obviously, he heads the Council of Economic Advisors now, and he's a cheerleader for America. but I would like him to be a cheerleader for America if he becomes the Fed chairman.
So now, Dad, what stocks are forecasted to post the strongest earnings in the upcoming weeks?
Yeah, this is what we live for. Earnings season is our judgment day. But let me just rattle off a whole bunch of them. Kin Cross Gold, that's KGC. Their sales are forecast to be up 46.8%. Earnings are forecasted to be up 194%. They have a very good earnings surprise history. This is probably my safest gold stock, a good core holding. Nvidia, as big as it is, sales and earnings are accelerating. Their sales are supposed to be up 66.7%. Earnings are supposed to be up 71%. They have a very good surprise history. These estimates haven't changed a lot since they announced their sales to China on the H200 chips. So we do expect their guidance is going to remain strong because their Chinese sales are going to be picking up. So NVIDIA's, there's a good reason it's our largest holding, and it should just be stunning. Another stunning stock is Palantir Technologies, PLTR. Their sales are supposed to be up 62%. Their earnings are supposed to be up 64.1%. They have a great surprise history. They are an AI implementer. They're implementing AI better than most companies are. And this is part of the productivity enhancement that's going on in America. Fortunately, they have a lot of government contracts, and our government is getting more efficient. Seagate Technology, STX, their sales are supposed to be up 17.4%. Earnings supposed to be up 37.6%. They do have a good surprise history. Some people may know Western Digital was the best performing stock last year in the market in the S&P. Obviously, Seagate Technology is the same business, Western Digital. So they're benefiting from the data center boom. Celestica, that's actually a Canadian company. Their sales are supposed to be up 47%. Earnings supposed to be up 58.1%. They have a great surprise history, so I'm counting on them. And one stock that did get beaten up a little bit was UI. They're the data switches for networks, and of course the high speed connections for the data centers. So because the data centers have to run at least 5 gigabits on data transfer. You can actually buy UI equipment if you go from like a 1 gig to 2 gigs in your house. You have to get new switchers because most of the old switchers won't work above 1 gig, and so you might have to go buy 2.5 gig switchers if you upgrade your equipment, and UI makes equipment for the home too. We love Lilly, LLY. Sales are supposed to be up 31.3%. Earnings supposed to be up 34.9%. They have a very good surprise history. They do have more exciting weight loss drugs in the pipeline. They are onshoring, doing what Trump wants, making the pharmaceuticals here, so they're in good standing. Carpenter Technology, CRS, their sales supposed to be up 8.4%. Earnings supposed to be up 33.4%. Very good surprise history. And we are picking up some healthcare stocks now. Cardinal Health, CAH, their sales are supposed to be up 17.4%. Earnings supposed to be up 19%. So as good as all these stocks are, not only must they exceed analyst estimates, they must guide higher. And provided they do that, things will be fine. But this is what we live for. This is why earnings season is so important. And again, we're off to a great start already because data center related stocks are 45% of my portfolios. On January 2nd, they gapped up intraday. So that we're off to a strong start, that we're going to be an earnings driven market and a fundamentally focused market. And the market is slowly going to broaden out. And of course, we will be hitting 5% GDP growth no later than the second quarter of this year, but we might actually touch it in the first quarter.
The first weeks of the year often set the tone for what comes next. We'll be tracking how earnings, global events, and the Federal Reserve shape the market's next move. Thank you all so much for watching. Please give this video a like and subscribe if you haven't already, but we will see you all next Sunday for a new video.